Hey, in today's video, wanted to talk about what is an escrow account and what you need to know as a homeowner or home buyer and how that affects your monthly payment. So we're going to jump right into it. An escrow account, really it's just a fancy word for an account setting aside funds to pay the bills as they come due. So each month when you make a mortgage payment, on most mortgages and in most instances, you're going to make a monthly payment that includes your taxes, insurance, and any other escrowed items along with your principal and interest on your mortgage payment. So if you ever taken out like a car loan or any other type of loan, you'd have your principal and interest set over a certain number of years, and that's what your payment is. With an escrow account on a mortgage, there's also additional items that are usually included as well. Not on every mortgage, but for the most part, your property taxes, your homeowner's insurance or your hazard insurance, and then things like your PMI insurance if you didn't put 20% down and your loan requires that. And if you happen to be in a floodplain, need flood insurance, then that would be included as well in your escrow account. So those four items, two of those are most common on almost every type of mortgage. That would be your property taxes. Here in South Dakota, they're paid out twice a year in April and in October. And insurance is typically, it's paid out once a year to your insurance company. Typically will renew on the month that you took out the policy originally. So if you bought the home and haven't switched insurance companies, odds are that comes due the same month that you bought the home. Like we said, taxes are due twice a year. PMI insurance, if you need that on your payment, that comes out monthly. And then flood insurance is typically paid once a year, just like your homeowner's insurance would be as well. So the easiest way to determine those items is just take whatever the annual amount is, divide it by 12, and that should be roughly what is included in your payment each month in your escrow portion of that monthly payment. So very, very kind of complex questions come from this, but it's a very simple idea, which is just paying the bills when they come due. It helps with your budgeting. It helps make sure that taxes get paid, that insurance gets paid, and nothing lapses in coverage. So most lenders actually prefer or even sometimes will require that you escrow for whatever items are needing to be collected. So long story short, property taxes, homeowner's insurance, PMI if you need it, and then flood insurance if you need it as well. Typically will be included in your escrow account, and that just gives you your total monthly payment outside of the 30-year or 15-year fixed rate or whatever you end up doing on the mortgage. Outside of that principal and interest. So that's your all-in monthly payment. Does not include things like utilities or if you have a homeowners association dues. None of that's included in your mortgage typically. Just those four items is usually what's included. So if something changes, just one last thing, if something changes drastically from one year to the next, that's where you see a lot of escrow accounts with shortages or a large jump in your monthly payments. Or things not quite jiving correctly. So if you purchase a home and it's set up correctly and things don't really change all that much, you might have a small adjustment from year to year just to make sure enough's being collected for those items that come due. A big one is if you purchase a home that is newly constructed and then your property taxes go way up or insurance changes quite a bit, that's where you see some of those payments get adjusted significantly as well, just to make sure you always have enough to pay the bills. So hopefully that made sense. If you have questions, feel free to reach out. Let our team know. We'd be happy to answer those for you. Otherwise, we'll talk to you again soon. Thanks.